Hey, good evening, everyone. Hello, Ross. Hey, Samuel. All right. Just getting ready for talking about some cryptos today. I got my coffee. Hopefully, I have some content to talk about. But exciting would be maybe to have some discussion on some topics.
Vivek,
Sure.
what was the? Do you recall the tea that you said that you really liked?
Tea. Okay. Hold on. I think I just got it here near my place. This is the stash tea.
Oh,
I bought it
okay,
at Amazon.
okay, yeah, I like that too.
Yeah.
Thanks.
No worries. Can we have some discussion on DeFi in general? Sure. We talked about DeFi earlier as well. So, Ross, if you have some questions or let us know where you want to start talk about. Maybe we can steer the discussion in that direction.
Yeah, Vivek, I'm just trying to learn about the DeFi space in general, and I apologize. I don't think I may not have attended some of your earlier meetings. I think you have these on your YouTube
Thursdays.
channel. Maybe I can look it up there.
Yeah. Yeah.
Uh,
So,
I, yeah, my reason for asking if we could just not want to hijack your topic for the day, but just to understand how the DeFi space is evolving. Because I came across a very interesting chart just a couple of days back about the companies in finance in 2010, and none of them are there in the companies in finance in 2020, and we're not too far from the end of this decade, right? 2030, what's going to happen, right? So I'm thinking DeFi is probably one of those areas which are maybe the factor that unifies all of the crypto, blockchain, CBDC, etc. So that's the reason for my question, just to ask about what's happening in the space, because
sure.
DeFi is evolving uh, very rapidly in
Yep.
terms of just technology, the early adopters, even the smallest evolution that's happening in, like, even the 0 day, if you want to call it, I would like to call it that, in 0 day DeFi. How is that going to evolve? With the big wigs like Visa, Mastercard, kind of trying to get into the space just before uh, everyone else gets in.
Yeah, all of them
So
are trying to get a piece of this DeFi action.
right. With the many central banks also trying to get in, and then does DeFi really become decentralized or stay decentralized? Because the same players, as conventional finance players, are still looking to get a piece of that pie.
Sure. Yeah,
Yeah.
interesting topic. So thanks for asking about this. Yeah, so let's start our discussion while others join. Maybe talking about DeFi, commonly known as decentralized finance. So I think you're exactly right in terms of so it started with trying to find a use case of around the crypto assets, right? So Bitcoin has got a use case of a store of value, but once we got Ethereum, where we got a smart contract functionality, it started to use, maybe we can actually write real contracts in it. And then from there, it started involving what else can we do? Can we write financial contracts in it? Then those who were been holding the assets or the crypto assets, they want to earn some yield, right? So then we saw a birth of some DeFi exchanges in which you can stake your tokens and earn some yield. Now, so there are multiple things that you can do as a part of a DeFi. One is For example, maybe let's start on the let's start on the DeFi side, and I'll be brief on in terms of some of the things that you can do in DeFi. So, and all these things are generally classified or called as a DeFi. One is, for example, providing liquidity. You can be a liquidity provider to exchange, right? For exchange or to these DeFi companies or a DeFi platforms like Aave, like Compound or others, or you can be liquidity provider to an exchange, and here you basically earn exchange fee. Right? So all these exchanges like Uniswap, you can go and provide liquidity to a particular pool of tokens. So you will see a pair of tokens, you could provide a liquidity to that pair. So traditional exchanges work on order books, and market maker provides the liquidity. The decentralized exchanges work on your automated market making, and we as an retail investors can also provide liquidity. So that is again called comes under umbrella of DeFi. Right? Next, what I can do on DeFi is earn yield. Right, just like we earn yield on our regular bank accounts, we earn yield in our traditional finance. Now I'm holding some assets that could be of value, which one asset comes to mind at the top is Bitcoin. How do I earn some yield on it? Right, I don't want to sell it. I'm long-term bullish on it, but if I hold it, it's just sitting there somewhere in a blockchain or internet. It's not doing anything for me. So how to put it to work? So we could earn some yield by staking it on DeFi platforms, or by lending it to a DeFi platform. So this also get categorized under as a under DeFi. So there are platforms that you can use. There's Aave, there's Compound. Even you can use, let's say, some of these exchanges. Kraken, if you hold some of the tokens, Kraken will allow you to stake some of the tokens with them. For example, they allow you to stake your Polkadots. So if you're holding Polkadot and you're long-term bullish on Polkadot, I don't want to sell Polkadot. I don't know where it is going, but I want to hold it for next 2-3 years. Maybe making 5% on Polkadot is not bad. Maybe I'll stake it on Kraken. So the Kraken is not traditionally DeFi platform, it's an exchange, but this functionality of earning a yield can also be termed loosely under DeFi, even though the Kraken is not decentralized platform. But I hope you get the win in terms of all these activities that we do, right? From there, it came on a yield farming, right? So yield farming became a concept which it was very active in, I would say, in early 2021, when we had the YearnFi project came to fruition. It suddenly became super hot in terms of investors, or I would say rather speculators, trying to put their tokens, say, in one liquidity pool, and then you when you put there, then you can actually borrow against your asset that you have staked. You can borrow some other coin, they'll take it to some other exchange, and then stake it over there, they get some other coins. So it's kind of a farming more and more, trying to generate more and more different yield using different exchanges or different projects. That concept was called yield farming. I don't see that happening too often right now. It's not the hottest area for now, but it used to be at some point of a time. What else? If nothing, plain simple, even if I don't want to do anything, if I don't have anything to do with, let's say, crypto as such, I don't want to have a volatility of crypto asset, but I have a USD, which is right now losing 7% to inflation every year. There are projects which are bridging the gap, or bridging the gap between the traditional finance and on the crypto finance. So projects like Nexo, Celsius, US, and BlockFi, these three are pretty big ones. And they allow you to maybe earn some decent yield on stable coins. They also allow you to earn yield on crypto assets, but if you have Bitcoin, they'll allow you to earn yield 5% on Bitcoin. But it means you have to stake your Bitcoin. You're still exposed to the volatility of Bitcoin, which right now is not going in a short-term holder's favor, right? But if you don't want the volatility of Bitcoin, but hey, I have some cash sitting in a bank giving me 0.02%, can I make use of, is there something on a crypto that could give me better? So companies like projects like Celsius, BlockFi, those are US-based regulated companies. They are actually giving a decent return of 8% to 9% on stable coins. So if I have spare cash, I might look at this option to maybe park some cash and earn 9%. Not bad, given where the markets are. Maybe I want to hold some cash for some time, and could be an avenue to deploy some cash. So again, this is not a decentralized finance, but it's a bridge between your traditional finance and earning more yield through the crypto companies. Now, traditionally, the traditional finance, TradFi, they have not rewarded their customers, but they've rewarded their shareholders. And what some of these companies they're trying to do is to also reward their customers. Right? That's why they're able to pass on and give us 8%, because they'll probably work on a lower margin and pass on the benefits to their customer. Bank gave us 0.02% on our deposits, but they loan out the same money and multiples of it to the end consumers at 4%, 5%. And all we get is 0.02%. There's like Jeff Bezos has told multiple times, your margins is my opportunity. So there are some of these projects in which you could actually don't have to take crypto volatility. Don't have to worry about that. You could just connect your bank account directly to this, do an ACH transfer of USD, and converts into stable coin, and you make 8% on a stable coin. Right? Not traditional. This is not decentralized, but it's a bridge between the traditional and the crypto finance. Right? Another thing, new project came in. I think I might probably have a link to it or not. Mortgage using Bitcoin. There's an exciting project that I came across this week, is a project called Milo. Now they are working on to provide mortgage based on the the Bitcoin that you stake with them. So your collateral is Bitcoin. So today, the issue with some of those, let's say the holders of these crypto assets they are asset rich, crypto asset rich, but they're cash poor. And traditional finance doesn't consider crypto asset as an asset while making mortgage decisions, right? So there's a project called Milo, which is recently gained traction, will allow you to take a mortgage loan with the collateral as a Bitcoin. So these are the ways in which you can interact, and then you can go into all the rabbit holes of, the highest level is doing automated market making, providing liquidity to those liquidity pools. and earn interest on that one. Then there comes a flash loans but that's more for arbitragers, or I would say hedge funds or traders who want to take a quick gain and on an arbitrage opportunity which is available. For example, this is called flash loans. Say on two different exchanges, there is a huge difference in between the prices of two crypto assets. Right? So now what arbitragers would do is take a huge amount of a loan, which will be a flash loan. It's termed as a flash loan because it's taken and paid off in a single transaction. If it is not, everything gets reversed. So such arbitragers, they will take a huge loan, a huge amount of a loan, pick up that amount, buy an asset on one exchange, immediately sell it on another exchange, make that arbitrage gain, and then pay off the loan that they have that they take on. All these things happen in single transaction. So and that's called flash loan. Now the equivalent of this doesn't even exist in traditional finance. Right? But this is very unique to DeFi. I mean, if you want to get into the rabbit hole of a DeFi, things like these are also available. Right? So from me personally as a retail investor, and I mean, I cannot spend the whole time on DeFi. I rather focus myself on making on a yield earning opportunities. Maybe stake the assets that I have, maybe make some yield on it because I want to hold those assets. So why not to put them to use? Little bit of basically providing lending to these lending platforms, right? And earning some yield on a stable coin. I haven't tried on a flash loans and all that, but there are opportunities available if you want to dig deeper onto this. So I hope gives a little brief overview of what all opportunities are available on DeFi. It's a rabbit hole. You can go as deep as you want to.
Yeah, thanks, Vivek.
All right. Okay, I see a few more people join. Chauncey Gray. Good evening. Good evening to you as well. Ramesh said flash loans equal to day trading. Flash loans is equal to a single transaction. It's not even day trading. It's like it happens, opens and closes within a minute or a few. So it's a part of a single transaction. So which is amazing. That's a concept a little difficult to wrap our head around because there is nothing that we have seen like this before these crypto assets became a thing. So there are generally questions on, for example, I mean, no one asked it, but obvious questions to ask is, how come these DeFi, not DeFi, how come these crypto projects are able to offer us 8% or 9% an interest? I mean, what are the risks involved? So let's also talk about the risk. So I'll come to 8%, 9%, but let's talk about the risk. We talked about DeFi, but is it completely free of risk? Absolutely not. So one thing that we need to worry about on the DeFi is the liquidity. There's something called impermanent. If you are providing liquidity to a particular pool of assets, there's something called impermanent loss. You have to read about it. It's like unrealized loss. You could have been better if you would have just held the assets and not provided liquidity. So there is a lot of literature you can find online if you really want to go deeper into it. So you need to understand the concept of impermanent loss. What are the other risks? You should always deal with the projects that have been around for some time, because the hacks are common. There are many DeFi projects that have been hacked. In 2021, close to $12 billion, billion for B, right? $12 billion worth of assets were hacked. I won't say all lost. Some of them were returned, were hacked on various DeFi projects. So you might find many DeFi projects offering 800%, 900% APY. Be careful. Understand, is this just a new one? And how are they offering that yield? Are they offering, and this I have seen in case of new projects or new assets coming on, they will, in order to entice more and more users to come onto their platform, because that's how they build the liquidity on platform. They will give, advertise 800% APY if you come and stake your assets with us. Right? The bigger question to understand is, where does 800% coming from? Is it just coming because they are just creating new coins? Then all we're getting is inflationary assets. So I would rather stick to some of the projects that have been around for some time and not fall into the trap of trying to make 800% APYs, etc. So that's one risk. You have to really evaluate the project and see that project should have been around. At the end of the day, smart contract is a piece of software code. Where there is a code, there is always a bug. Where there is a bug, it is always be susceptible to any kind of hacks. Right? So it's important to, if you're trying to do DeFi, it's important to look at that project and do it. Liquidity is really important when you focusing on any sort of a DeFi. Right? Understand that this is not a regulated space, means you don't have FDIC insuring you. You are your own insurer. If you send an asset to a wrong address, it's gone. It's there is no way you can call someone and get your assets back. So to be careful in if you're trying to move your assets. That applies to I guess any type of assets, not just to the DeFi. So you have to be comfortable with that. But yeah, if you can go through all this, there are opportunities. There are people who basically are focused solely on DeFi. I use it as my side, I would say side income, rather than having my dollars sit in a bank account. Maybe I'll use it to buy some stable coin and get 7 to 8%. And I'll try to look at the project which is earning 7 to 8% by rehypothecating those assets to institutional investors. They might be getting 10, 12% from those institutional investors. And if they pass on 8% to me, I'm good enough. Right? Again, like Bezos says, your margin is my opportunity. So what they're trying to do, such projects are challenging the existing, those traditional brokerage houses. I don't know if you know or not, but the shares that we might hold with the brokerage houses, they could lend it to someone. They never gave me a penny for that. My bank, like I was giving an example earlier, my bank lends multiple times of the money that I hold with them, and they give me pathetic interest of 0.02, but they make some decent margin. So now these projects are trying to challenge them and give better margins to the customers. So I want to be shareholders of traditional finance, but a customer of these crypto finance companies to get the best of the both worlds. Ross says hard money loans in real estate are in 8 to 10% range for real estate flippers, and investor syndication receives 6 to 8%. Yeah. So the difference is 2%. So yeah, I mean, these are many ways you can engage in DeFi. It's a rabbit hole. All right. So, and Ross, when you said maybe you were referring to this particular chart, I don't know, but this was an interesting table that I came across on Twitter. And again, be careful around what projects you want to work with, because the leaderboard keeps changing. Something which is hot today may not be hot few years down the line. And so 2017, Bitcoin, Ripple, Ethereum, Bitcoin Cash, Cardano, Stellar, Litecoin, Tron, sorry, not Stellar, this is XEM. I even forgot what's the XEM project was for. Stellar is down there, that is XLM, it was Stellar. Tron, IOTA, Dash, EOS. We don't see any of them in top 20 anymore. So 1, 2, 3, 4, 5, 6, only 6 remain in top 20. And that too, the leaderboard has been rearranged. So
What does the black and the yellow mean?
so this yellow means that the ones which were in top 20 projects in 2017 are still in top 20 leaderboard in 2022 as of January 1st. This space is so early. It is, I would say, except let's say a few of the projects, maybe a couple of them, I would say. I won't even say few. Maybe except Bitcoin and Ethereum. I have a hard time putting a stake in the ground and saying, you know, these are rest of the projects will be there even after 10 years. The changes are happening so rapidly. The space is evolving so fast that I do want to look at the longevity of the project and see, you know, how long have they been around? What have they done? And maybe the best is for the new ones, yeah, spread your risk. We never know what might happen in next 3 years, which of the projects will be around and may not be around. Right now, they may be on the top of a leaderboard. Who knows where they will be in 5 years down the line. Well, this was an interesting chart as an eye-opener, because I do see people talking about and chatting about this is an amazing project. They're doing so many things. I'm like, yeah, I read similar white paper in 2017. Those projects I don't see anymore. So if you extend the horizon, it is, you would say many, and again, my personal thinking is that most of these projects, 90% of these projects out of, how many do we have right now? 17,000 will churn. Means they will cease to exist. Now, those 5-10% that will continue to survive and stay, that's the idea, is to look at those good projects and follow them and not jump on behind any of these everyday biggest gainers. I don't know what Metaplanet 1000%. So that's a challenge, and that's why I want to focus on studying about, oh, this is now down 40, it's okay. So we came and maybe let's look at the crypto. Isn't looking to be great at all right now. I know the traditional stock market also has gone down, has been in NASDAQ is now officially in correction category. If you look at NASDAQ, it's down more than 10% from its all-time high. That means it is now officially in correction category. We won't call it a recession. I think that's a 20% benchmark. But yeah, it's been almost 10%. Those who are a chartist may want to look at these moving averages, if you believe on that, and of that have helped you in making decisions. So NASDAQ is just gone below their 20-day or 200-day moving average, right? Simple moving average. SPY, it hasn't touched its 200-day moving average yet. Its 200 moving average stays at around 440 or so. So the next support level technical traders are looking at is see if it holds up 440. If it holds up 440 and go back, maybe we get a bounce. Otherwise, right now is looking at we'll have to wait for a support level at 440. But yeah, things aren't rosy. I mean, we have had almost 18 months of free money, and that spoiled the markets, that spoiled the investors into thinking that market always go in one direction, whether it's a crypto or a stock market, but that's not the case. So those who have been around have seen the story multiple times, right? And it's almost impossible to predict what the market is going to do in short term. When I say short term, what it's going to do next 1 year, 2 year? No idea. You know, in a
Yeah,
10 years, it'll
this
probably
is
be higher.
yeah, this is probably a small blip, right? Because from the COVID bottom to where Nasdaq went, it went up to almost 9,000 points.
Yeah, and right now it is still higher than where it was at the COVID bottom. So if you look at, if you expand your horizon to 2 years, I'm like, yeah, or 3 years, yeah, we're pretty good shape, right? So I don't see any concerns from that respect. But the problem becomes those who recently came into market, or in some specific companies. I mean, overall market didn't fall as much as some of the specific high growth companies have fallen. I think it's in last 2-3 days where we saw some weakness into the big market cap companies, and that's why we're seeing the indices going down. But I mean, if you want extraordinary return, this is the cost that we have to pay. The cost is volatility. Same is the case with cryptos. All right. I mean, in a traditional sense, crypto is considered as a risky asset. So right now, everyone is heading for, exiting the market, trying to move into cash, now holding the cash because now we suddenly are afraid on, I don't know what's going to happen in market, as if the end is near. So if that's the situation, you'll start selling your so-called risky assets or one which you have been holding for gains in next 5 years, 10 years, not doing anything. The high growth tech companies, biotech companies, genomics companies, genetic engineering companies, EV companies, battery companies, EV battery companies. We all selling those and moving into more traditional dividend paying stocks, more stable ones, utilities, commodities. But yeah, that's the life of an investor. So we see crypto all going red as well, because they're considered as a traditionally a risky asset. But how do I care? I mean, it's okay. I still see a lot of adoption and exciting projects coming in crypto. So I'm still bullish on it. And I didn't invest in it for Bitcoin to see what it's going to do for me in 2020. So that's fine. I don't need this to perform to pay my bills. I see a few comments over here. Ramesh, CBS News. Is it the reason crypto was down today beside the stock market? Is the news related to there was a hearing on the mining operations. I don't know if the news is related to that or what. Firstly, I didn't have a busy day at work today. Didn't have a time to focus on. Oh no, okay, no. This isn't candidly a little old news, and this 30 million hack doesn't even bother me at all. We have seen hacks worth of $600 million, right? So 30 million is a very small number. But today there was in Congress, I don't know whether it was House or Senate, but there was a briefing around the whole crypto mining and what are the regulations around the mining. So I don't know what came out of that. Unfortunately, the miners didn't have any representation in it. So most of the folks who are in the forefront of crypto kind of dismiss that, saying, we don't know why the government is what they're doing. It's like you're blaming the miners for whatever you want to blame for. You can blame them for boiling the ocean. You can blame them for journeying and burning electricity. You can blame them for consuming the chips that should have gone into cars or other appliances, but you don't have any representation from miner to defend themselves. So I don't know if anything came out of that or not. But yeah, this hack. So Crypto.com, they suspected there was a hack. Then they stopped withdrawal for a day or two. I was aware of that. That happened a few days ago. I think now they're confirmed that $20 million were lost. Maybe before this, they never confirmed any loss of funds, but now they confirmed that they lost $20 million. Not a big deal, pretty small amount. Those who have been active, this $20 million is nothing. That won't move the market. Chauncey says, do you use any strategies to save tax on gains? So you can do tax loss harvesting. So which is more on the stock side. So I do become a little more cognizant and cautious and more closely will check in terms of what's my realized gains are. Then I will look at my portfolio in around, October end time frame to see which are the ones stocks that I bought it because someone talked to me about it, or the ones which I don't follow anymore and are in loss, and I can sell and do a tax loss harvesting. So remember on that. But two, on the crypto side, you don't have a wash sale concept as of now. I don't know, IRS might implement it in 2022. That's different. But as of today, we don't have a wash sale concept in crypto. So if you bought Bitcoin at 69 or whatever price, today it is 40. You can sell it today at 40, book a loss of $29,000 and buy it tomorrow at 40. And thus you can offset any other capital asset gains against Bitcoin. But I believe IRS, there was some draft rule in IRS to add this and apply the wash sale rule on crypto assets as well. But as of 2021, if you filed or did that in 2021, you could have done that if that option was available, right? So unfortunately, I didn't have to do any of that stuff. So, but yeah, these are the things you can use to reduce your taxes on your capital gains. I don't know if you had something else in mind. I don't buy annuity to reduce taxes, but I use these strategies to reduce taxes. Other is, depending on account size, you could actually, again, this is not related to crypto, but on the stock side, you can actually trade on indexes. Indices have a favorable tax treatment. Any profits that you make on, let's say, index SPX, 60% is taxable as a I forgot, 60% is long-term, 40%. So they got a favorable taxes. Let me put it that way. But I generally don't trade on SPX. It needs much bigger account. Buy in IRA accounts, coin, ETH. Article say they pay the holders. So ETHE or coin, yeah. So those are the, like, you can buy these things because these things trade on exchanges, on your brokerage firm exchanges. So you can buy it in your a regular brokerage. I mean, I hold some ETHE or GBTC in my IRA account. I do see an ad of some firm that says you can actually directly invest in crypto in our IRA. Other than that, ad shows up on YouTube, I Trust Capital or something like that. I've never used that. Chances, I believe Warshill is being implemented. Yeah, I heard that too. Yeah, BTC, WPTC, TBTC, REN BTC. So I think if, again, so James, hey James, welcome. It's not sure how they're defining similar assets for the wash sale rule. Now, the beauty is IRS doesn't take any headache of defining what is similar to other. The onus they put on the investor or the tax filer. And I hate that part, because even if you look for today, the traditional one, the definition or the guidance from IRS is you cannot buy the same or similar security. If you buy it within 30 days, it will be considered as a wash sale. Right? Now, they don't give a definition of what do you mean by similar. Say if I sold Apple, and if I buy Microsoft, someone from IRS can argue that, yeah, they are similar. You run their charts, find out a correlation. That correlation may be more than 90%, and can argue that these are similar securities. So the onus is on investor to put for their case if IRS comes and asks about more information. So BTC, WBTC, TBTC, REN BTC, or all other form of these wrapped BTCs. I don't think IRS is going to define it, but if I were, I'll consider them as a similar asset, because they all go up and down in prices in the similar fashion. Right? On a stock side, if you sold a stock and if you immediately buy a call option, IRS could consider that stock that you sold as a wash sale, because you bought a call option which will behave similar as a stock would have behaved. But then you can go and argue it that I have an out of the money call option, it doesn't behave. So there is always a gray area. So I think that's what IRS does. They put the onus on us to argue whether it's a similar or not. But specifically on the questions of BTC, WBTC, I think I would consider all of them as a similar assets, because they are nothing but another representation of the same asset on a different blockchain. And even the value is also same as a base BTC, right? So if you look at WBTC, 40,000. REN BTC, which is on another chain, cash will be near close to 40,000. So this is where the arbitrage is. You got a $90 arbitrage, but of course you have to pay a lot of fee and all that stuff. So what are the other one? TBTC will be all considered as a similar asset. So yeah, 2022 we won't have that advantage or option anymore. Chris says, no, Congress never expand wash sales to crypto. It was proposed, but didn't pass last year. James, anyone can create a token with a price oracle to track the price on another token and trade it on DEX. I can't see how it can possibly pass without explaining these obvious loopholes that are even difficult to exploit. You don't know what can happen in Congress. We passed that infrastructure bill in which, if we just look at what's mentioned in the infrastructure bill, will make folks like you and I, we could actually be subject to doing KYCs and stuff like that. Any developer could be considered as a brokerage house. Any miner could be considered as a brokerage house. So if you're running a mining rig to mine some coins, you might be subject to the regulations that the brokerage firm is subject to, that you have to collect information on your customers. So yeah, don't underestimate how stupid things can happen in Congress, and they could pass anything, even if they don't understand how to even implement it. I mean, there was a lot of pushback from a crypto community around how do you even implement it. I mean, the few lines that they inserted in an infrastructure bill last year, which took everyone by surprise, and it's really, I would say, a bad sign for a crypto industry. But yeah, our lawmakers can do a lot of strange things which we don't know, which we would think, why would any rational person do this? Yeah, but it's rationality is not the only qualification for being over there. So yeah. Now the question would be, how would you track it? How would you enforce it? Right? That becomes a bigger question. So what might happen is maybe some of the DEXs, again, there are questions around how decentralized a particular DEX is. Could the regulators go behind, or the law enforcement could go behind the developers of those DEX, or force them to implement some KYC? In that case, some of these projects will just shut US residents out of it. Would be bad for us because they don't want to deal with these issues with the regulators. So possible. But yeah, a lot of stupid things have happened and could happen. So I won't underestimate saying, well, how could they possibly pass this? They have done that before. We recently had a precedent of that. And if you want to talk about it, you can unmute yourself and talk through it. I know at the end of a day, after doing the whole office work, our fingers want some rest as well. We don't want to type, so that's fine. The only death that is 100% unstoppable is Uniswap. I don't know. I mean, how about if they start to go behind the Uniswap developers?
No, you can't. You can't do anything. You know why? This
They
is
don't have
the
admin
funny
keys
thing.
of.
This is, yeah, they don't have. So Uniswap is the only DeFi. So Uniswap is the only protocol that I admire, like truly admire. And it's funny because it's a protocol that I want every DeFi. It's what I envision DeFi to be. But unfortunately, aside from Uniswap, I'm not aware of any other DeFi protocol that's that hardcore. So Uniswap. So let me tell you why it's so hardcore. Okay, they deployed their core smart contracts with no owner, no admin key, no pausability, no upgradability, no proxy, nothing. Done. So it's bug free for some reason. Like, it's crazy. It's so hardcore. It's like the most hardcore project I've ever seen. So it is on the blockchain now, both V1, V2, and V3, and they can never be shut down and censored and modified. So it's crazy. It is unthinkable, like how crazy that is. So like but the Uniswap team runs a UI.
Right.
They can go after the team, and they will have to delist coins from the UI, but I can easily.
Yeah, so I think they did that.
Right?
They unlisted some of the coins which they were afraid the regulators will come behind them. They unlisted some of those coins from their UI. I think it happened last year.
But anybody with half a brain can easily access these coins or these pools through the command line. So there's nothing has been removed, like from the actual contracts. So it's pretty crazy. I suggest if you're into like hardcore decentralization and censorship resistance, then look into Uniswap. It is the only. Everything else, every other project has pressure points.
But many of the projects, DEXs were just the copies of Uniswap.
Yeah, so the copies are okay unless they put it in front of a proxy, which can happen. I've seen some projects where they copy, like even Compound's not 100% immune because Compound has governance, so they can upgrade and change contract parameters.
Yeah. Interesting. Yeah, thanks for sharing that.
Yeah, anytime.
All right, I don't see any other questions. So maybe let's look at the funds flow report as we always do. 1, 2, 3, 4, 5 weeks. Not surprised based on what we've been seeing in the past few weeks in the stock market or crypto market. Anything which is considered as a little risky asset has become expensive because the risk-free interest rates will go high. So some assets are moving out. And we also saw the same with the institutional investors, because hey, if I'm withdrawing, selling my GBTCs and all that, at the end of the day, it's a bad is still bad. Who have to go and sell it. So anyway, not much bothered about it, much less than what we had in a previous week. But one interesting thing that came across was Solana remains an investor favorite with total inflow last week. Bitcoin saw an outflow, Ethereum saw outflow, but Solana actually saw an inflow. And maybe I'll attribute this to a Bank of America analyst who put a report on and compared Solana with Visa. I think it's the heading was the Solana could be Visa, equivalent to Visa of a crypto world or something like that. Yeah, it could become a Visa of the crypto, Bank of America analyst says. And this was all based on how fast Solana is and what it says. Let me just read. Become the Visa because focuses on scalability, low transaction fee, and ease of use. While Visa processed 164.7 billion transactions in the same year, Solana has settled 50 billion since it has launched in 2020. So I think this could have caused some more institutional investors or the retail investors buying into Solana-based trust funds, which would have caused some inflows into those. Today, Ethereum can handle around 12 transactions per second. Solana can process close to 65. The limit is around 65,000 transactions per second. Okay. But what some of these analysts, actually they did talk about it, which is good. That Solana actually suffered number of network congestions. I think 2 weeks ago, we talked about that. That was like third or fourth downtime that Solana had because of congestion, and they have a component called Sequencer, if I'm right, that gets overwhelmed multiple times. So I'm happy, good to see a project getting acknowledgement with a traditional financial analysts, which is good to know. But whether Solana will win in the long term, will it continue to see the same traction once, let's say, Ethereum fee goes down? Who knows? Right now, everyone is jumping to Solana or Avalanche just for one reason. It is quicker, and I want to buy that NFT for $50. I don't want to pay $150 in Ethereum gas fee. So for me, I'll go and buy a monkey JPEG on or NFT on Solana or Avalanche, where I pay hardly any fee. But if Ethereum scales up based on their plan, and the fee, and also they move to proof of stake, and the fee goes down, we will then start to talk about the other things. Okay, which is more decentralized? Today, if I own an NFT, can the transaction be reversed? Who knows, right? So I think we'll start thinking about those once we're gonna also have Ethereum scale as well. Yeah, merge will not. Yeah, so we'll have to. So there are multiple things. Of course, there's a merge to proof of stake. Then there is a sharding. After the merge, then the sharding will happen, and then as well the layer 2 ZK rollups and all that. All those stuff need to come together for Ethereum to truly scale. Yeah, James, I agree. A merge is not going to bring down the gas immediately. But we are seeing a lot of traction on Polygon, right? One of a side chain. I think that's one project where I'm seeing a lot of stuff happening in recent times, even on the VC side or the acquisitions. They recently acquired, like spent $400 million in buying another company. And now I think this week, they also implemented their own version on EIP 1559. I don't know if they call it as a PIP, but damn, one thing which sometimes irritate me is after Ethereum implemented this burning for through EIP 1559, every damn project just talk about burning because they think if we just burn it, the asset price will bump higher. And I hate burning the coins just to get your asset price higher. It's like a CEO trying to manipulate your stock price or playing gimmicks to just increase the stock price. But whatever it is, we saw Polygon.
Yeah,
burning
we're
everything
actually
burning.
launching. We're actually going to launch on Polygon.
mean-
That's, but the burning by itself isn't bad if the burning is tied to revenue, right? So if like if the chain or the project makes revenue, and then the revenue is then used to buy up tokens and then burn the tokens, that is not terrible, right? Like that's an easier way than doing dividends, right? Compared to because isn't that what
No,
companies do in traditional
no,
finance?
in
as well?
traditional finance, no, traditional finance, I equate it with the share buyback, right? You buy back the shares and then you expire those shares. This is what
It's
it
more tax efficient. It's also on the blockchain. It's much easier to implement than
Oh.
to distribute dividends to all of the accounts. I mean, that's not efficient, right?
Yeah. So yeah, I saw a Polygon EIP 1559, I think went out today. I don't know what's with my browser. I can never get this right. Activates. Okay, so so EIP 1559 upgrades are going live. 17th, not today. Maybe a couple of days ago. Yeah, it goes live on January 18th. BTC. So they are moving into the same concept like Ethereum. Only the validators are getting that fee, and the minor rewards are being burnt. We'll see. But I do, aside of this, I think I see a lot of traction on Polygon. Many projects are actually moving onto Polygon as well. Not so now, to me, it looks like a de facto. If you're on Ethereum, you got to be on one of these scaling chains, either Polygon, Optimism, Arbitrum. Yeah, there have been some, they are not yet battle tested. I don't know, James, what your opinion? But I do see they're still running out of a test net and not really battle tested. It's very few projects. There are some projects going on it, don't get me wrong, but Polygon is the leader in terms of right now, at least I see in scaling solutions for Ethereum.
Yeah, I'm kind of torn on that as well. Like we decided to do Polygon and Avalanche out of all things. Those would not honestly be my top picks. I would probably lean more towards Arbitrum or Optimism, right? Because I think those are true layer twos, and I know they're kind of centralized, but they're all pretty centralized, right?
Yeah,
Polygon.
yeah, exactly. And Polygon is not even layer 2, right? It's a side chain.
Yeah,
it's incorrect to call it as a layer 2.
Yeah, and the bridge is also very much managed by a simple multisig, right? So I mean, honestly, yeah, I think only time will tell if one of these layer 2 solutions. I do have kind of high hopes for something like ZK, like the Starkware stuff. That would be nice, right, to have. But they're not ready, so there's not much we can do about that.
But isn't the whole DYDX platform, if I recall correctly, that's built on Starkware?
Yeah, but in order to build on their stuff, you need to kind of work with them.
Okay.
Yeah, like it's not as straightforward as something like Arbitrum, which can be done very quickly. Even Polygon is not difficult from a technical standpoint. You do have to watch out for the contract addresses when you deploy. That's about it. But for ZK for Starkware, it's kind of a pain. So from a technical standpoint.
Yeah, but I mean, yeah. So I started watching Polygon in around 2020, and at least so far I've been happy as an investor. Now my only thing is because this whole ZK stuff started to come up, and I was like, and Vitalik anyway told that for he's looking at ZK to be the future. So yeah, so I mean, I was somewhere around
Shut down.
25 cents or yeah, maybe mid, yeah, 20, 25 cents is where I got. I'm like thinking, how long should I hold on? But I recently saw Polygon spending $400 million to, I think they bought a company called Mir or something, to basically become a big player on the ZK rollup scaling solution. So I'm like, okay, I'll wait. I'll wait to see how good they perform and how it works out. But
Yeah, we shut down Arbitrum because of the withdrawal delay.
the 7 days.
Yeah,
Yeah, okay.
there is a problem with if we wanted to do fungibility, maintain fungibility across chains, that
Mhm.
can be a huge issue because in order to liquidate, you can't really have that, right? So
So
um,
I don't know if there's some other services exist or not. I mean, I can closely track this, but you guys are in this you're in ecosystem. But I was reading about that this problem of this 7-day challenge period on these optimistic rollups could be solved in another way, in which you could have a company like, in traditional finance, we have an insurance company, maybe another project which actually is willing to take that risk. Say I do the transaction, I want to withdraw immediately, and the other project could do a discounting. If I want to withdraw worth $100, I can only withdraw 95 immediately, and the other project or the intermediary, they take a risk of $5 and wait for 7 days. Are you seeing any such projects actually talking about it?
yeah, but my problem with something like that is usually something like that is the amount of discount that you're getting is more or less market driven, right?
Yeah,
Depending on how much
absolutely.
risk is in the system,
Correct.
and that just adds another layer of risk to, because when you want to maintain solvency, because unfortunately we're in the lending business, right?
Mhm.
That's, I mean, if we're doing some other stuff, maybe it would be fine, but because we're doing lending, and when it comes to lending, your lending protocol is as good as your collateral management, right? Like if you otherwise you could quickly become insolvent, and in order to maintain fungibility, we have to be able to quickly liquidate without that discount,
Got it.
right?
Yeah.
And it's hard. I mean, it's doable. I'm sure in like in the future it'll be doable, right? But it's just for now that remains kind of a hurdle for us.
Okay. No, thanks for sharing. But yeah, I mean, these are the things which blow my mind off in terms of, hey, we are so early in this, because these things do exist in our traditional finance or traditional economy, where you can transfer the risk by buying an insurance. And there are many players that do exist. We got to see the same stuff happening on the DeFi. So a few other things. I don't know if you're interested, but I also wanted to, I mean, you tell me what you want. So there are a few things which I noticed were interesting. Maybe we can quickly go through that. And then I also came across a report from ARK Invest. It talks about the valuation framework for Bitcoin, which was an interesting one, because today, Bitcoin is just buy and hold. Mostly it's a buy and hold, kind of considered as an asset, right? But so how do we value it? I mean, is it the value is only lies in, passing it to a greater pool, or how do you want to see, is the value accumulating in Bitcoin because of certain reasons? The blockchain is open, and then it had put together a decent report. I haven't gone through all, so I was hoping maybe we'll do it next week, but we'll see. If you want me to jump onto that, maybe we'll jump into that. Otherwise, there are some interesting tweets in the news. And I also saw this GBTC discount. Maybe let's talk about this first. This discount is tempting for me, which is 26%. So those who, if you're not familiar with this, GBTC is a trust fund managed by Grayscale Bitcoin, sorry, by Grayscale investment management company. So ever since, the market peaked in the initial euphoria on the Bitcoin and the institutional investors, once that started to fade, the trust fund is available at a lower price than the amount of a Bitcoin that it holds in it. For example, if this fund holds $1,000 worth of Bitcoin, today, this fund is available at $740. You can buy it at $740. So this is called a discount to its net asset value. It's a pretty traditional term. Prior to this particular line, say Feb, it was trading at a premium. Means why it was trading at a premium? Because there was so much demand from institutional investors coming in. We saw in 2020 a lot of institutional investors starting taking exposure to crypto assets. They are not allowed to buy and hold Bitcoin, except few of them like MicroStrategy or Tesla's of the world. Most of the hedge funds, most of the family offices, or any other institutional investors, if they want to take an exposure, they had a vehicle, Grayscale Bitcoin Trust, from the Grayscale Investments. And it was in great demand. Some of those institutional investors paid up to, let's say, 40% premium. They could have, we as a retail investors, if we bought Bitcoin from an open market, we got it at 40% cheaper price than some of the institutional funds who basically paid through their nose because they wanted to get exposure to Bitcoin. Now that same fund is available at 26.5% discount. I'm a little tempted by it. It's not a financial advice, but let's understand the risk behind this. This discount may continue for longer than what you might expect. I actually picked some of it, and I think I talked about it earlier, when it was around 17% discount. Now it is available at 26% discount. So I'm tempted. Now, when this would close, say Bitcoin doesn't move anywhere, but if this trust fund gets converted to an ETF, and now that's a big if, because even today, SEC rejected an application from Anthony Scaramucci's fund, I think Skybridge Capital. So they rejected an application to launch Bitcoin spot ETF. There are a few more coming, in line for SEC to review it. But whenever they approve the conversion of this trust to ETF, this gap will disappear. So we immediately get 26% bump. Even if the Bitcoin price doesn't move at all, the value of this GBTC would bump up around 26%. Now, the bigger question is, when will that happen? Do you have a wherewithal to hold until then? It may never happen. So those are the risks. But for now, this seems to be a little juicy to me, rather than maybe rather than buying a crypto asset, maybe I'll look at this. Again, you do your own math, but we gotta take some risk if you want to buy some stuff at a 26% discount, right? And all the way in, I don't know when this was launched, maybe let's check when the GBTC. Yeah, so this one, I don't know if I can go back. How far can I go back? Oh, this is the free one. Will give me. Oh, I can't. Oops. 5-year. 10-year. Oops. This is damn expensive. I mean, I want to, but it's expensive, not for retail investors. Yeah, so it's been mostly in premium because there were no other alternatives for family offices to take exposure to cryptos. So they were ready to pay through their nose, but now it has flipped on discount. So if it gets converted to ETF by doing nothing, even Bitcoin doesn't move, we'll get around 29, 28, 20. Oh, today it says to 28. That screenshot was as of yesterday because the markets were weak and the fund was even weaker. So, but an idea, if you are, and if you're looking for an exposure, and you could buy this in your RIA, your IRA accounts. Cool. All right, what else caught my eye? Today, NYC mayor receives paycheck in Bitcoin. Yeah. And after receiving a paycheck, maybe he's now 5% poorer or whatever, 2% poorer for today. Again, this is, I think this is more symbolic than anything else. You could always receive your paycheck in dollars and immediately buy Bitcoin. But from an optics perspective, I think it does project the mayor as more progressive, more open to crypto economy, more open to crypto related companies, which is what New York needs. They have such a draconian laws around the whole bit license and the way companies can operate. Another one which I saw was we have a sandbox for virtual land. We got a decentralized land, and the companies are racing to buy some virtual lands. We saw another project which went live this week, and this one is from so-called dead chain Cardano. So looks like there was a virtual land on a project which is on Cardano blockchain, which went live, and there were over 100,000 lots. 60,000 have been already sold, but they are available for anyone except US and UK due to regulatory uncertainty. Geez. Yeah. So we might not hear about this project in US because it's not even open. So if we are talking to our friends, they probably may not even know because we don't know. This is not even available to US investors. But we are seeing more and more such projects, especially around metaverse, anything that has to do with metaverse. Microsoft bought Activision Blizzard. Right? As a crypto enthusiast, I would like to twist it saying they bought it because of metaverse. Of course, in a press release, they did talk about it. But yeah, there are a lot of other stuff behind it. Microsoft wants to go big on the mobile. We'll probably talk it on our Monday meeting on why Microsoft actually bought Activision Blizzard. But yeah, we're seeing anything that has to do with the metaverse, to do with the virtual land, virtual stores. There is appetite to throw some dollars. So interesting to see another project going live on this. Next one saw was a Walmart actually preparing for a metaverse too. And they filed for a patent to manufacture and distribute virtual goods such as electrical goods, toys, and even clothes. So there was a time when we started saying that every company will be a data company, which is now true. Every company is now a data company. Every company will become an internet company. And maybe 20 years down the line, every company will be a metaverse company. So I distinctly remember when I started my career, having a company website was a big project, right? Hey, you better have a website. for your company, right? Of course, you have your online office presence, your brick and mortar office presence, but it's good to have a website. Now, today, you can't even think of having a business without an online presence. I think 20 years down the line, you need to have your presence in a metaverse as well. Now, which metaverse will succeed? I have no idea. Whether it's gonna be a Facebook promoted metaverse, whether it's gonna be a metaverse on Decentraland, whether it's gonna be metaverse on this new project Pavia, or on Sandbox, or will these metaverse actually talk to each other? It is difficult to imagine. I'm just excited to just think about these possibilities of what might be coming up in next 20 years. I think it won't be far-fetched to think that these strategy consultants and the business and the IT consultants, going and talking to customers, and instead of talking about in your digital strategy, you will have another slide which talks about what should be your metaverse strategy. Today, it looks like more of a joke, looks like more of it's only for those who are in the video game businesses and all that stuff. But I think that the time will come when having a metaverse strategy will become a part of your core base. I mean, you can't run your business without having a metaverse presence, especially the consumer facing goods, which is, damn, we are so early. I mean, all of you who are here are interested in knowing about it. I mean, we are those 0.0001% who are in the, I would say, forefront of seeing this new technology unravel before our eyes. That is why I'm so interested in learning about everything related to crypto, more from a business point. How does it impact business? What products are going in? Yeah, the asset price will take care of it itself. Right. Another interesting one, 200 small banks plan to go live with NYDIG. This is third or fourth time. And this is, we can now connect all the dots. Way back in 2020, there was an announcement of NYDIG and FIS joining hands. Then later 2020, we saw the community banks regulator approving that community banks can now can become a custodial provider of digital assets to their consumers. Right. So now we see how the dots are getting connected. And now recently we saw, because now the infrastructure is ready, partnerships are in place. We saw maybe 200 small banks actually putting a plan to go live with the help of NYDIG, because NYDIG has already put together a partnership with FIS. That's where most of these banks, community banks or small banks, run their financial systems on. What they want to do? They want to let their consumer buy and sell Bitcoin on their mobile banking apps. Isn't that great? I mean, so these are the things I want to focus on. I'm like, wow. If this happens this year, dude, I'm looking at this is going to be great. What does it say? An estimated 300 banks, some of which unveiled their plans in June. It's talking about June 2020 that we just talked about earlier. Will go live in the first or second quarter with this service. And now if I'm thinking, so 300 banks, if I recall the numbers correctly, these FIS on their system, there are the banks have total around 300 million accounts which are running, right? Probably not all banks will go with this, but now if there is any truth in this news, this is a credible source, American Banker. So I do place some credibility in this. But if this starts, I mean, all other banks, community banks would be thinking, why my competitor? Why not me? If this works out. And what do you need to do? You don't have to do anything. I mean, not much work, because they are using a platform which is supplied by FIS. I always get confused between, is it FIS or Pfizer? I think I talked about earlier also. Is it Pfizer or Pfizer? Sorry. Replace FIS with Pfizer. Somehow I can get this number right. So yeah, so Pfizer is a company that provides banking system to the banks that cannot build their own banking system because they don't have a big IT team. The number of banks that they have on their system have approximately 300 million accounts in them. 300 banks are actually started to look at this option to allow their customers to buy and sell Bitcoin. So I'm like, wow, another way the adoption could increase. So I'm still hopeful on this one. I don't know, what's your thought? But I find it really, really interesting. I will wait for a day when you can actually log into your bank. You don't have to open an account with your crypto exchange, which is what, one of impediment to adoption is. Not everyone is comfortable in dealing with crypto exchanges, but everyone is comfortable in dealing with their bank with which you already have a relationship over years. All you need is on your banking app. If I say, yeah, buy this, whatever coin you want to buy, all the hurdles in the adoption have been taken care of. So pretty exciting news. So want to keep an eye on what happens next. This is the third news in the same series. Next one, 140 billion asset under management fund is considering to launch a crypto fund. It's a big fund called I think Man Fund in Europe. Man Group, not Man Fund, Man Group manages 140 billion in asset, is looking into create a crypto fund for its clients. Again, good, but I mean, better than nothing, but not as exciting as the previous news for me. But the fact that the big hedge asset management companies, I mean, in US, we already have few in Europe also are seeing the reason why they want to create is because they're seeing demand coming from their customers. There is an awful lot of ways of just sitting passively on crypto. You just go buy the underlying, there are all sort of ETFs and say, I'm not going to do something like that, but we're going to create our own fund. Again, from adoption perspective, great. Coinbase and MasterCard, they tied up. This is where the crypto companies and the TradFi, are meeting together, again, from an adoption perspective. So if you've been watching the news, Coinbase had announced that they will launch their own NFT exchange. They can't let OpenSea get all the revenue. Right? OpenSea has been they raised recent funding valued at almost 13 billion, maybe now 15. Who knows? But that's one of the biggest NFT exchange in current ecosystem. So the explosion that we have seen on NFT, how can Coinbase sit outside? So Coinbase wants to get in. They already announced their plans. What they want to do, make it easy for users to buy NFTs just with the credit card and debit card. So today, if I were to buy an NFT, number one, I have to open an account in OpenSea or any other NFT exchange. The different blockchains have a different NFT exchanges. There is another one called Rarible. There's OpenSea. There's a new one coming as a looks rare. Then I think Cardano have their own. Solana have their own NFT exchange. Every blockchain have their own NFT exchange. These are one of those bullet items to must have if you want to call yourself as a layer one, right? You gotta have a DeFi exchange. You gotta have a play to earn gaming. You gotta have an NFT exchange. You gotta have a stable coin, and yeah, these are some of the stuff, and borrowing and lending, some of the basic stuff that every blockchain has. But what Coinbase is trying to do is, when you log in Coinbase and onto Coinbase, you don't have to buy Ethereum or any other token. You could just swipe your, or I would say key in your credit card information, and everything will be handled at the back end by Coinbase. Not efficient from a dollar value perspective, but man, we are removing a friction of buying Ethereum, adding it to MetaMask wallet, or if it's a Coinbase wallet, I don't know how the Coinbase is going to do it, but all that friction is gone, which will make it way more easier for anyone who's been sitting on a sideline because they were done, they got overwhelmed by the whole process of buying NFT. It will simplify the user experience. Another step on adoption side. So yeah, I mean, few pretty exciting things. I don't know what else you have seen which was exciting and want to share. And lastly, I saw this today. Damn, I hate Twitter for doing this. I'm literally not. But Twitter launched, they talked about it earlier, but now they actually launched NFT profile picture verification, which is an interesting concept. I mean, the whole point of buying NFT is to talk about it, right? Or to show that, yeah, I'm an owner of that NFT. What many of those crypto pioneers are doing on Twitter is changing their profile picture to that NFT. So you would see pixelated images as their profile picture, the CryptoPunks, or you would see those apes board, apes images, photos as the profile pictures. But till today, no one could stop me from just right-clicking, saving that pixelated image of a CryptoPunk and using that as my profile picture. Right? And I could just change my handle to whatever, punk1331, whatever, and try to fake in saying, hey, I own that crypto and I want to be part of that community, want to belong to that community. I want to own that ape. I own that ape picture, and which is now my profile picture. But Twitter is going to throw cold water on all those plans now. So what Twitter is launching is a service in which it will actually verify whether my wallet or my account is actually the owner of that NFT. If yes, it will actually show up a little differently. If no, it will show up as the way traditionally it shows up in a circle. So if I now right click and save anyone else's NFT and use that in my profile, it's actually, I'm carrying a big symbol over my head saying, oh, this is fake. This is fake. Who wouldn't want to do that, right? So here's another way where we are seeing a traditional company integrating their products with NFTs. I also heard Facebook is trying to do something similar, is launching an NFT verification service. I don't know the details of what exactly, but this is, they announced, I think today or yesterday. Yeah, no, this came in today. So no more right clicking and stealing NFT and using that as a profile picture. If you use that and say, this is my NFT, Twitter will put a mark or will show it differently than how the original, the real NFTs are shown for the owners. So yeah, this is this cool announcement. I don't know. How many of your NFTs are you interested in NFTs? Anyone bought some NFTs? And there are three types of board Ape Yachts Club NFT. Oh, this is there's a club. Where do you buy these NFTs? Has anyone bought any NFTs? No one is interested? I think it's it's on OpenSea. Do you think it's just a fad?
I'm curious about them, but haven't bought any. In fact, I'm just new to the whole crypto thing.
Yeah.
I mean, I know about I've written NFT contracts before. Like I know how the code works, but I'm personally not really. I don't want to really associate myself with NFTs. Like when people say, "Hey, do you know anything about NFTs?" I pretend I don't because I don't know. Like I know why. I like the tech is obviously cool, right? This smart contract ownership
exactly.
verification. But unfortunately, I just think we're using cool tech to do stupid things. That's all I that's all I can say. Like it is a little unfortunate. It's like we invented the computer and then we use it to play games or something, right? So like, I mean, sure, it is. I know how the tech works, right? I know the NFT standards. I've written contracts. I've integrated with OpenSea before. I know like the whole pipeline exactly, like deep down how it works. But that doesn't tell me why I should buy an ape, right? That's what I'm saying.
But this happens with every type of technology, right? So people will use it for fun,
yes.
for entertainment. Like I said, when computers came in, we spent most of the time doing solitaire, playing solitaire.
Yeah, to me, it's a little sad. I mean, I don't blame them, but it is unfortunate, in my opinion. Like we should use this technology to do, like we should use NFT technology to do actual things, like tokenize bonds and real estate,
tokenizing credentials,
and
identity
patents,
verification,
and things like identity. Yeah. Not like stupid images, right?
But I think that's where more. But I consider this as a but as like a gateway drug, right? This is what get people into crypto. Wow, I can own this. I like this. Yeah, what is this NFT? How do I do this? Oh, I need to have a MetaMask wallet. What is this Ethereum? I think it from that perspective, I like that it is brought in a lot more people who had nothing to do with the crypto, but make them little interested in this ecosystem. Now that interest came through this, great. You and I probably wouldn't have been, able to make them interested to maybe take some flash loans. I'm explaining
fun fact, I almost joined OpenSea.
Yeah,
I almost joined OpenSea.
So they got millions of new users.
Yeah, I don't know, but I decided to go with DeFi. I mean, it's not really my passion, but I see why people like it. I mean, it's easy. It's much easier to understand than DeFi.
Yeah, exactly.
Right?
Yeah. But again, I don't associate myself with whatever this club is, nor do I have any interest in these GIFs. So that's the reason I haven't bought anything. So we'll see.
Funny, I actually think this is more difficult to understand than DeFi.
Oh, you think so?
I tried to explain this to
thank
my
you. Thank you.
Like what an NFT has value, and I couldn't explain it to my father. And but I tell him, oh, you want an 8% crypto savings account? He gets that right away. So
I actually have a decent number of NFTs and worth actually a decent amount across all my wallets I got for free. I've never paid anything for NFTs. Just over the years I've used. Actually, it's funny because people think NFTs are new. They're not new. They came out like way back in the day. And it's funny because like I actually used a ton. I actually got a ton of like old NFTs from like 2017, 2018.
Do you have an e-rock? We are having multi-millionaire in this group.
Well, the thing is,
do you have that
I just don't like.
I'm just kidding.
a lot of these NFTs, I mean, some of them still have value, some of them don't have
Yeah.
value anymore, and it's very difficult for me to really put wrap my head around
again,
it,
I
right?
think, yeah, we talked about it in some. So the value which I see in these NFTs is not in this image, but what's behind this, right? The reason why people got 65 million, and that's where the whole craze started. It was the first one. Why he got $65 million for his 5,000 days NFT was because he painstakingly has been taking pictures every single day for what, 15 years, whatever that 5,000 days is, 15
With
years.
every
maybe?
days or something.
Yeah. So that's the reason. If you were to replicate that, you need 15 years worth. You need to have that people 5,000 days NFTs, right? This is the one. You need to do this process for 15 years. And I can right click and save it. That's a different one. But you need to do this process for 15 years. So I understand why this is $65 million worth, right? I saw today there was a news of a one kid, I think now adult, maybe 20, 21-year-old, let's say kid, in Indonesia. He recently, he made more than $1 million selling NFTs. But those NFTs are having a similar concept like Beeple. I think he's been taking his pictures for every day for past few years. And then he thought, why not create an NFT out of it? Created NFT, put it in an exchange with a note saying that please don't misuse my NFTs, my pictures, my parents will feel bad. And I think he created maybe 1,000 of copies of it. Coolly, he made $1 million. Right?
Yeah.
But it took 5 years. You have to put in that effort, right? The NFTs that you talked about, and maybe like Eat Rock or these crypto punks, or maybe crypto kitties, I don't say. Well, those have a significance of a history behind it. Some of them were created by the initial OGs in this ecosystem. Maybe some of them were the first NFTs that were minted on Ethereum blockchain. There will never be a second first, right? So
Yeah.
I think that has got some historical value behind it. But what I can't wrap my head around is these new NFTs coming up with mostly touting about what a great community would be. The third one would be if you are using these NFTs as a part of creating a community, and then you give a value to that community, saying if you are this NFT holder, you'll have access to these backstage events, you'll have access to these separate discussion boards or whatever, right? But that
Like
is
the Gary
equivalent to
Vee.
holder any pass, right? I can
Gary
hold
Vee,
any pass and become a part of that member as a. But I guess many of these will die down. We'll wait, but I do understand the concept and significance of behind it. But like many other things, it's pretty much hyped up right now. So,
Yeah, I mean the tech is interesting.
Tech is
I mean the in terms of having these contracts that can verify and trace how what you own essentially, right?
yeah,
And putting metadata in there to some extent is pretty cool. We actually, it's funny, fun fact, we actually use at Notional, we use NFTs to actually keep track of those bond positions. So we use NFTs for bonds. What we do is, because every NFT has an ID, so we encode the ID with the interest rate, maturity, and some other information. So but OpenSea doesn't really understand the ID. So if you it'll show up kind of weird on OpenSea. It is the standard 1155 ERC 1155.
1155.
So so it is standard compliant. So they will see it, but they can't possibly decode that ID. They have no idea that that's interest rate, that's maturity, that's but that's it. I thought, isn't that an interesting use case of an NFT where then I can actually transfer that bond over to you, then all of a sudden you're starting to earn interest on that bond.
And I think what I also like this is, for example, the whole the traceability and you can the the trace everything, and also the original creator continues to get paid, can define in terms of continue to get paid even on a subsequent sales, right? So which is, if I'm an original creator of a piece of art or a music album, I do see a lot of value in that in terms of them to continually earn royalty income. I mean, you can define
Yeah, you do
what
whatever
I
you want.
make in a first time sale, or what I want to, how much royalty do I want to make in a till perpetuity. So don't care, you sell it to someone else as an original creator, I'm going to get benefited still, right? So,
Mhm.
so yeah, so I
Or
mean,
you can time it. You can put a you can
Yeah,
put
yeah.
time lock in there too. Yeah, you can do whatever you want.
yeah, you can do whatever you want.
Yeah, yeah.
It's an amazing tech. I agree. But yeah, like every other tax, we'll first figure out what attracts people, and then we'll come with the real life use cases. So lastly, I was, like I said, I came across a report today. I haven't read through fully, but there is always a questions on how to evaluate Bitcoin. So this is a framework. Maybe we'll cover it in the next session. Is at a high level, at a 3 levels, you can actually do a valuation of Bitcoin. First is that looking at a network health, which means, is there any risk to the Bitcoin as a network? How's my hash rate going? How's the adoption going? How many addresses are being generated? Is the transactions happening, right? We consider that the whole idea of Bitcoin is a money system, new monetary system for the world. So we have to be really, really sure that it's absolutely solid at that level. Then you move up and try to figure out a valuation based on buyer and a seller behavior, right? And what have they also done is explained in the report. Maybe we'll look at it. Is a report on what kind of a metrics are actually available, because this is an open public blockchain, right? You can see who is not who, but what addresses are selling, what addresses are buying, how long have they held it, when did they last sell it, what was the Bitcoin price, if some address is bought on an X date, is that address in profit or loss, right? All that information is available. And now using that, you can generate some graphs or metrics to figure out, how it's like doing your valuation analysis. We don't have a traditional, I would say EPS, right? Your earning per share, which is a metric you use to value your traditional companies, right? Your market cap or your PE or your EV by PE. But there are metrics that you can actually use, especially on the Bitcoin ecosystem. And that information is available. The beauty is this is a public blockchain, and all that information is there for us to observe and consume. So it's a 28-page report. I don't think we'll have time to go through this today, but maybe next week. And again, I haven't went through all. I think I went through only this buyer and seller. Some of these concepts are a little difficult to understand. MVRV ratio, realized profits, but it's an interesting report. If you always wondered, should I do a technical analysis on Bitcoin or these crypto assets? So I generally don't focus on, like, say, technical analysis of Bitcoin because it doesn't have much history. Number two, it is driven by a lot other factors than 20-day or 50-day or 200-day moving averages. But I like what this report has to talk about is overall, what's the framework which ARK is using. And, because this open public blockchain, we all have access, could get access to this data and look at the health of a network. Going further down, looking at the hash rate, which talks about, is this network secure or not? Miner revenue, if miners are making money, they'll have a inherent incentive to secure it. How's the adoption going? Looking at an active addresses. How's the supply distribution? How many are the ones which are retail investors, which is down here in purple, less than 10 BTC? Where are the big holders? How that composition is changing. More importantly, transaction volume. What's happening to the transaction volume? Transaction counts, buyer and seller behavior, which talks about coin years destroyed. Again, there's a lot more information. How many Bitcoins are currently in profit? How many are in loss? Because this information is open. I know what exact time that Bitcoin was bought in a particular wallet address. What was the price of Bitcoin at that point of time? What is price today? So we know how many wallets are in profit, how many wallets are in loss. And we also know the age of those wallets, right? So generally we have seen in these turbulent times, the wallets which are new ones, means the people who have recently entered into crypto, you will see them selling at a loss. Yeah, I got at 50K, now it is 40K, or this ecosystem is not for me. I think this is all crap, I'll sell off. So you will see many of those younger wallets or recent wallets realizing losses, while those so-called diamond hands, or the ones which have been wallets have been there for many years or few years, those who have been in the ecosystem for longer, might be basically taking, and accumulating. Great thing is all this behavior is available. And I think, in my opinion, I want to focus more on this to understand how, Bitcoin as an ecosystem will evolve and what insights we can get into this. So I find this interesting. Unfortunately, I only got my hands on it today after my, finish my day job work, and I didn't have much time to read through this. But let me know. Sounds interesting. Maybe we should dig into this, or I just think it's too technical. Maybe I'll just look at what's Bitcoin doing in last 30 days or 1 month and make a decision based on that. But irrespective, I think at some point of a time, I will definitely want to go through this, understand more on this. And interest, maybe we'll talk about it next week. So yeah, that's all I thought. Maybe I'll share with you guys today. Anything else that's interesting? Any other interesting projects that you have come across?
I want to hear more about James's token.
Does the Notion has a token of its own?
Yeah. But I don't recommend buying it right now. See, I'm really honest. That's the thing. That's why people don't want to talk to me, because I'm being too honest all the time, and people want me to shell stuff, and I just can't do it. I don't recommend. I mean, if you want to buy, be my guest. I mean, their liquidity is very low, right? There's not much liquidity right now. It's not listed anywhere except on Balancer, and there's not much liquidity even on there. So if you buy a reasonable chunk, you'll move the price. That's what I mean by low liquidity. Okay. Now the thing is, we just released the token, right? And the predominant value of the token is governance. Now there really is not much to govern right now, because all the parameters are set, and every quarter we do the quarterly roll. I mean, unless you want to participate in because we do have a Discord server, and if you want to talk to us about rate anchor, adjusting the rate anchor and orient the yield curve and all that. I mean, I don't think that's pretty technical, right?
Gosh, so buying a huge amount of tokens won't make me your boss? Then I can tell James what I want him to do.
I don't think so. No, I mean, the team has a lot of tokens, so there's not even that much to buy right now on the market. Now the thing is, I'm working on the staking contract, which will be used. Now the staking at Notional is a little bit different. I would say it's very similar to Aave, where staking has multiple functions. So one function is to receive revenue, protocol revenue, and the revenue is actually pretty significant. If you go on to Zapper, you can actually track the amount of money it's making. So because
how it is, I mean, I think in our previous one or previous.
Well, a pretty easy way, right, to do this is to put in the the notional contract address.
Okay.
Right.
Yeah, I was tracking
Uh,
what Vitalik has.
Oh, you always try.
No, I
How
mean,
do
we
you-
were taking an example of this. I think someone had asked earlier, saying if I hold coins and multiple wallets, how do I know across my accounts am I holding? So I came across this website, and so we actually went through this in one of our previous session. So for
Right,
an
right.
example, I took Vitalik and some other addresses I saw on Twitter.
Yeah, so you can put this address in, right? Here, put it. This is the notional proxy address. So we are behind a proxy. Don't,
Okay.
I mean,
Not
so
really
it is
decentralized.
upgradable. We are not anywhere near. See, the thing is, I admire Uniswap. To be honest, I want Notional to eventually be like them, but it's gonna take us a long time to get there, and hopefully we don't get like slammed down by the SEC. But the the thing
Also-
is, so this is yeah. So if you want to track the claimable part, right? So we just launched in like about three months ago, and then we already got $600,000 of comp. That's one part of the protocol revenue, right? Because we are actually the second, maybe second, third largest compound user. So because when you deposit through Notional at a fixed rate, we basically take the asset that you give us for collateral, and we stick it into compound.
So
So-
help me understand. So for example, let's say I have staked something on Aave. So you're saying that what Notion helps is instead of me directly going to compound or onto Aave, I basically stake it through Notional Finance.
No.
No,
That's
not
not how.
that?
No, that's not what Notional is for.
Okay.
Notional is fixed rate lending. The problem and borrowing, right? The problem with compound is when you lend and borrow, the rate changes.
Yeah, it's
It's market driven, right?
I think
there's no way to fix it.
Aave has recently added fixed, but those rates are
That's not
ridiculous.
fixed. That's not fixed.
I mean, those are like just for FII, because no one would opt for it, because you see a variable is
Yeah,
borrowing
no,
rate
that's
is like
not- that- that's
3.5%.
not true.
Fixed
Yeah,
is
that's not true
12%. I'm like,
fixed.
who's gonna click on fixed?
Yeah, that's not true fixed. So that fixed rate borrowing is basically they put in a huge margin to that's not how we do it. We actually issue bonds. We work exactly like how bonds work in the traditional finance. We have 3 month, 6 month, 1 year, like all these maturities, and we do also. So when you actually, the funny thing about Notional is lending and borrowing. If you really know a lot about bonds, it's really buying and selling, right? That's essentially what it is. When you want to lend money, you're buying a bond. When you want to borrow money, you're issuing a bond, right? So you're selling a bond. Now, here's the thing, right? For us, saying the price is the interest rate flipped, right? And the funny thing is, with Notional, you have three parties. You have borrowers, lenders, and liquidity providers. Liquidity providers allow bondholders to exit early and borrowers to repay early, right? Because you're always curious, like when you have bonds, how do you get out of that, right? Like a lot of people, like they don't get if you do a 5-year bond, how can you get out, right? So you need an active market, but you can't have an active market for every maturity. So we actually, there's a complicated math that goes into solving these problems to make sure like you can avoid these maturities with no active markets. But the thing is, that's what Notional is. It's fixed rate lending and borrowing, right? So it provides a fixed rate. But the thing is, when you borrow, you need to provide collateral.
Yeah.
And the collateral normally just for a typical protocol, it just sits in there and not doing anything. What we do is we take that, we put it into compound, right?
Okay.
So we earned, so your collateral is still earning interest.
And then do you pass that over?
Yeah, well, yeah, this is where it comes, right?
Customer?
So yeah, so right now the profits accumulating in the contract, we can't really take it out. I can't even take it out because I'm writing code to make it so that it's possible to take it out. And
So
in
this
the next,
claimable, you can't claim right now.
No, I cannot.
Okay.
Right? There's no contract function that allows you to claim that. So what I'm working on right now is part of the staking contract is we're going to be have a function in there to be able to claim all these different profits. There's trading revenue as well. When you buy and sell these bonds, we take a cut, and from the farming, right, which is comp. And then what we do is when you stake, your token actually goes into a balancer pool to provide liquidity for Note, and the staking contract holds the liquidity token from balancer. And then we also have, as part of the upgrade, we'll be able to claim these profits, and the profits will be turned into ETH, so it will be sold through 0x or OTC or DEX.
Yeah.
And then the resulting ETH will be put into the balancer pool on the ETH side,
Each side.
raising the price of Note, right? So raising the price, and that is the perpetual stock buyback program. And that will be the revenue sharing for Note, right? So if you hold on to Note and you stake it, the Note price should steadily increase as long as the protocol is making money, right? Now, it's not all like rainbows, unicorns, right? So also, when you stake, the contract will also kind of, so if we ever get hacked, or like if there's ever an insolvency or something that happens to the protocol, we will also go and claw, we'll take up to 30% of whatever is in the staking pool, and we'll sell that and we'll recapitalize the protocol. So it is also, you're also inadvertently providing insurance for the protocol, and it's not optional. If you want to stake, you need to be part of this insurance.
Out of this insurance.
Yeah, so this model is taken from Aave, which does the same thing. So when there's a protocol shortfall, we call it a shortfall event. We will go. That's why when you unstake, we lock you for 2 weeks, because we don't want people to run away if protocol gets hacked, right? Like you're like, it's hacked, we're gonna unstake, right? So we will. I mean, but as part of this, you will be eligible for revenue sharing. So the 600K you see right here, you use to purchase Note to push up the price, which will be revenue sharing. And there's also
basically you'll convert this into ETH and then add it to the liquidity pool of Node versus ETH.
which is basically buying Nodes.
Got it.
But we'll not be buying Node directly. We'll add it as liquidity, right?
Yeah, you'll add it to the
increases the balance of ETH, and the pool will be 80-20, so 80% Node, 20% ETH to ease the impermanent loss. The problem 50-50 is impermanent loss, right? So this is basically how it works.
Someone asked me, I think earlier we were talking about DeFi. I'm like, one concept that you'll be aware of is the impermanent loss. Look, it took me a few times of reading through it and watching around YouTube around to understand the whole concept of impermanent loss, because this whole the AMM concept doesn't exist in TradFi for retail investors. So if I'm providing a liquidity to a particular pool, what the heck is this impermanent loss, and why would we go in loss? It took me some time to understand.
Well, one concept that's not easy to understand with AMMs is that AMMs are 100% passive, which means that the price never moves until somebody trades. It stays. It never moves. So it really relies on arbitragers to come in and make it in line with centralized exchanges, because we don't actively, there's no active market making in AMMs.
Interesting one. Yeah,
I don't understand traditional finance, but I can talk DeFi all day. So I don't get traditional finance. It really is hard for me to wrap my head around.
So eventually, I mean, I understand a little bit of traditional finance because I've been active in markets for quite long. So to understand, a little bit of that side. And DeFi is new.
There's it's so not transparent. That's my problem with traditional. Like, it's funny how I got into a big argument with somebody at a different meetup because that person was really adamant about not open sourcing DeFi contracts. So his argument is, and it's interesting because it's much his argument actually makes sense to like somebody who's just coming into DeFi or with no prior crypto experience, right?
But if you're a DeFi and if you don't open source,
how do you know
you're not regulated, you don't have an address, I don't have a neck to choke. Why would I put money on?
Exactly, right? So they didn't even see that. So his argument was that if it's not open source, then the hackers won't be able to see the code and will make DeFi a lot safer. So
here's the I haven't spent time on the blockchain, but I spent many years in working on with the teams on open source project. I worked on both type of companies. We built our products which are on proprietary technology. Then I moved into a company where we worked on open source. We basically contributed to open source technology, mostly Apache. And then we also enhanced it and used it, build our products on it, right? The amount of innovation or the pace of innovation I saw happening on the products where we were using and contributing open source was mind-boggling for me. And I was like, dude, when we were working on our proprietary technology, I had only limited amount of engineering bandwidth. And we always had to, make choices between to implement function A or add this functionality or this functionality, right? And we had a huge backlog. We just don't have a bandwidth. We just don't have enough for eyes while testing that. When I moved to my next job, which was around an open source, I'm like, wow, I love this pace of innovation because there is a lot more eyes, there are a lot more contributors. I don't have to depend only on my engineers. I mean, we get into a call wherein we have folks from multiple companies who are also working on the same open source project, and that's where I really learned the value behind open source project. It is difficult to make money out of it. Red Hat is a prime source. I mean, they've done it wonderfully. They've encashed it. Not all companies can do it, but from an innovation perspective, man, there's a lot of innovation.
Yeah, you understand that, but the problem is it's very hard to explain that. Like a lot of non-tech people actually agree with his opinion, right? Like not open sourcing makes it safer, makes it more difficult to attack, and that's where we should be. But that's definitely not the case, right? So it's very hard to convince people that's not the right type of thinking, right? And for smart contracts, open source is kind of a requirement. Like you said, there's no. I mean, when I put money into a bank, when I make a deposit, Bank of America, I know for the most part they're not going to just take my money and run away, right?
Yeah.
But for a smart contract, how do you know if it's not open source? How do you even know what it's doing?
So either I myself audit it, or I get an audit report, which will happen, or the last option for me is I'll wait for the protocol to mature, let other people put money on it, let them be there for 2-3 years, get the bugs fixed, get them hacked, and then maybe I look at that. Yeah.
Maybe I should start writing now open source contracts and then advertise it as more secure.
Yeah. Anyway, great discussions with 8 o'clock. So I want to thank you all for joining today and participating and giving us ideas on what we can think about in crypto. Like I still feel we are way early. I know markets are ugly right now. This is all red, but unless we see at least I don't see, both in the venture capital side as well as on adoption side, I don't see any slowdown just yet. So this will pass through. We want to focus on the technology, we want to focus on adoption. And I think we are onto something which is going to be great when we look back 10 years later, that we used to meet up and talk about this when the technology was in infancy. It's going to be great. So
this in the metaverse. Yeah
exactly. Yeah.
Let's do it.
Yeah, we'll probably talk in metaverse, not in Zoom boxes anymore. Cool. Thanks everyone. Good night, and I'll talk to some of you on Saturday. else, next Thursday, we'll be back here. Good night.
See you guys. Bye.
Okay,
Thank you, Rick.
how long are you usually on for? You on 2 hours or 1 hour or 1.5 hours or what?
Generally target is 1.5 hour. I think today I just got so much involved on the notional finance. There's a lot of interesting stuff to talk about it. So I think we went over. This one
And-
is generally 1.5 hours, but maybe say between 1.5 to 2 hours. Let's keep it that way.
Yeah, I see. And then I'm still trying to get my hand even around just basically the operation of the basic crypto. And, I don't know if you can steer me to, an easy introduction here. Something.
So let me find out some resource on something crypto for newbies that can help you in terms of how to understand or get started in this ecosystem.
Yeah, all right.
So
And is there a way that I can contact you in between your sessions?
you can drop me an email on. I'm just. Yeah, I just pasted my email.
I'm sorry, what?
I just put it in the chat. So I monitor it once a day, so don't expect immediate response. This is the email which I use, after work. This is not my general work email, which is I use after work to interact with stock
I'm
or
sorry.
crypto investors from different from our meetups.
Wait, what's that? You use what to interact with them?
No, for example, if you have any questions, shoot me an email on this one.
Okay, VIVEK at optiongig.com.
.com. Yeah.
I don't suppose there's a way I can text you, is there?
No, let's keep it on the email.
Okay.
I prefer that.
All right. So it's at VIVEK at OPTIONGIG.com,
.com.
right?
That is correct. Yeah.
Okay, well, thank you very much.
Cool. All right. Thanks, everyone. Good night.
Yep, good night.